Trader Strategy Market Commentary for Monday, July the 25th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data to go over as for a Monday. Generally, there just isn't a whole lot going on there. We do have a lot of earnings that are going to be coming out today and tomorrow morning that we need to take note of. Gilead Science, we've got Las Vegas Sands, 3M is another one, and Verizon, and what was the other one? Oh, Under Armour. So I'm going to be looking at all of those, trying to figure out what kind of earnings setups I want to do for those, and follow me on Twitter because that's usually where I'll blast those out late in the day so that you guys all have an opportunity to see what those are. Anyway, on to the overall markets. We've got crude oil right now basically on the lows of the day, down $1.20, trading at right around $43. $42 handle is, or the $42 a barrel is basically where I see the next stopping point for this. Because I just see it going down here, testing this area right here. Crude oil slipping like I've been talking about for some time now. The gold's pushing higher off of the lows anyway, as the overall equities have been falling out of bed for the most part. Feels like it's really falling out of bed, but they're not down a ton, but they do feel like they are really sliding quite dramatically. As you can see here, crude oil, gold /GC down just over $2.50 right now, but pushing higher as the equities slip. Bonds again, the other flight to quality, coming out of equities into gold, into bonds /ZB, pushing higher, up 10 ticks on the day, but still pushing up as the overall equities are sliding. The NASDAQ, as you can see, down 10 points. It feels a lot bigger than what it is, despite the fact that they're only down 11 ticks now. I, again, see this wanting to come down and get below this value area high. It's just a little overdone to the upside at this point. E-mini S&Ps actually leading to the downside /ES, down 10 ticks on the day, almost 11, right there lock and step with the NASDAQ, but as a percentage term, this is a much bigger move to the downside in relation to the NASDAQ. Now this is a 15-minute chart on the daily breakdown for the E-mini S&Ps. As you can see, basically right after the market opened, not a whole lot of economic data, but the market just really, as the day session began for the equities, the overall market just fell out of bed. So pushing much lower. Hopefully we'll get a little bit more downside in these equities because I'd like to see some volatility expand a little bit. And at this point, we're just really not seeing that happen. And from a selling standpoint, as the strategies I like the most are collecting premiums, this is what we need to see some volatility come into some of those equities. The only thing that I've really done is FCX. They've got earnings coming out tomorrow as well in the morning. So I decided to cover my trade in there. If you remember, I did a poor man's covered call in FCX. Did this wrapped around the webinar that we did on poor man's covered calls. This one worked out really well. And I had on the Jan of 17, 5 calls that I bought. Those were in the money. And then I financed some of that extrinsic value of those options. Now remember, intrinsic value is what's embedded in that option, and extrinsic value is what is priced in for the theta decay. And so to finance that extrinsic value, I sold the August 13 calls. So I limited my risk, or limited my profitability to the upside, but I also limited my risk by taking care of all of that extrinsic value that'll just start decaying. And I originally paid $5.40 and sold out of it today for $7.08. So that was a nice win for that. And you know, the best thing about a poor man's covered call is you're laying out a lot less in margin than going out there and buying 100 shares of the FCX at $10, and then trying to write some calls against that. I paid a lot less for this strategy and participated for the most part on the upside as much as I would have with the 100 shares. Probably about 80 shares of FCX is what it was equivalent to. All right, that's about all I got for you guys today. Hey, we're going to be doing a couple of webinars on building option strategies around technical analysis. So stay tuned for that. Go to protraderstrategies.com, sign up for that. Also, we released a course on volatility crush, which is very top of mind right now, especially with the earnings season going on. There's a lot of volatility embedded in some of those options contracts that are wrapped around these earnings events, and we're going to be taking advantage of that volatility crush that we see when the binary events happen. All right, that's about all I got for you guys today. Go to protraderstrategies.com, sign up for that, and if you can't take that, take it easy.